to the third day session on advancement of the branch, CA Macharam Minavali sir. I speaker of the day, CA VS Sudhir sir, and all the delegates to the third day program. A warm welcome to all of you. Before starting the program, may I now request our chairman, CA Macharam Minavali sir, to give the introductory remarks.
Thank you, Deepak ji, the dynamic vice chairman of Hyderabad branch, Deepak Ladda, and the respected delegates. And I don't know what is the word we need to use for Sudhir Garu, because he takes a lot of responsibility for an Hyderabad branch. As and when we requested him just with a phone call, he helps us, Hyderabad branch. And Sudhir sir, thank you so much for designing this entire program and selecting the speakers and selecting the topics and taking this much burden in spite of your busy schedule. And you're giving a time to us not only for taking the seminars or webinars, and also for helping us a branch in designing these type of programs. And we really owe to you from the Hyderabad branch and from the entire delegates. Thank you so much from my bottom of heart, Sudhir sir.
Thank you, but no formality, sir. It's my own branch. So.
Yeah, thank you, sir. Delegates, thanks for your joining. And as a tradition of Hyderabad branch, we are starting sharp by 6 o'clock. And without taking much of time, I'm handing over event to Deepak Ladda sir, because the topic is very good today. It's the third day of GST webinar. And GST important EAR and landmark judgments. And we have an awesome speaker today, Len speaker today. And without wasting much of our time, I'm handing over to Deepak Ladda ji.
Thank you, Chairman sir, for your quick introductory remarks. I welcome Treasurer of the branch, MS Rajambal ma'am. May I now request
Deepak, your voice is getting disconnected. Sudhir sir, okay?
No, his voice is breaking.
Yeah.
Okay.
May I handing over to Rajam, no?
Yeah. May I now request Ms. MS Rajambal ma'am to kindly introduce the speaker of the day?
Yes, sir.
Thank you, Deepak. A very warm welcome to the Chairman Hyderabad branch, Vice Chairman Deepak, the speaker, distinguished speaker for the day, Sudhir, and all the delegates. Welcome and happy learning on GST. Sudhir, I think next time onwards, whenever I'm asked to introduce you, I think I will run a quiz. I will start saying, come on, let me know what all we know about Sudhir. I think that's the number of times I have read your profile and introduced you. Yeah, next day, I think all of us know by heart, let's get started introducing Sudhir. Everybody will start telling about you. I think that will be a good way to introduce. Joke apart, thanks for being with Hyderabad branch so much. Sudhir, one go-to person for GST. Even for me, any doubt I have, one person I would call first is Sudhir. I think that is one thing for me. Go-to person for GST has always been Sudhir for me. And I think most of the people in Hyderabad, and also as a faculty for the Hyderabad branch. Sudhir is a BCom LLB FCA, and he's only 37 years of age with so much knowledge. And he's with Hiregange and Associate and heads the Hyderabad branch for the firm, which provides consultancy, audit, litigation services in GST, customs, and FTT. He's completed his schooling and education in Bangalore, qualified as a chartered accountant in 2006, done his entrepreneurship development at Indian Institute of Management, Ahmedabad, and has contributed various articles for professional institutions like ICAI, Institute of Cost Accountants of India, Trade Journal, Service Tax Reviews, and others. He's presented papers as a faculty in National Academy of Customs, Excise, and Narcotics, which trains departmental officers. Presented papers in various trade forums like ASSOCHEM, KSCAA, and FAPKI, and AP Plastic Manufacturing Association. Been a visiting faculty at Watson Business School, BITS Pilani. He is also joint author of Practical Guide to Service Tax and jointly compiled GST Tariff, which is published by Bharat Law House, and How to Tackle Problems, published by Bharat Law House. He has also co-authored books on GST, on real estate. He was a part of Hyderabad study group on GST formulated by ICI and contributed for preparation of background material on GST for training of CBEC officers. Presented papers on GST in various forums He is a member and co-chairman of Indirect Tax Committee of FTCCI and a past member of Regional Advisory Committee of Central Excise and Service Tax Department, Hyderabad. But for all of us, he's a lovable Sudhir, the one go-to number which you can always reach out to. Sudhir, I will not take much more time than this. And welcome and thanks for accepting to speak before all of us. Thank you, Sudhir.
My pleasure.
Yeah, Deepak will also recognize the presence of Anil Kumar Bejawada, the speaker for 5th day. He's a colleague of Sudhir sir.
Good evening, Anil sir. Sir, the screen is all yours, Sudhir sir.
Yep. So my screen is visible. One slide. Perfect. So thank you, Rajam, for again reintroducing me. This has been a formality, so people keep on doing this introduction every time.
No, next time onwards, I'm sure we are running a quiz. Sudhir's introduction quiz program.
Sure. 1 minute, I'm just trying to. Okay. So the topic which has been given to me as a part of this 5-day course is to talk about the landmark judgments and the advance rulings under the GST is concerned. To as much as possible, I have taken the case laws which are of the landmark, whether it's new or old. As far as the advance ruling is concerned, I have tried and restricted and tried to take as much as the recent advance rulings are there. So that is what I've tried to do this, and we will be having a session about an hour and a half, and we would have more time for the question answers. And I'm lucky that my partner Anil is also there. He is fully hands-on on all the case laws, so you will be adding if at all I'm having some challenges or something which I'm missing out. Anil is there to fill up the gap. Thank you, Anil, for joining in. So let me start with a few case laws which has dealt with the constitutional validity as far as the certain parts of the GST is concerned. So this is the case of Mohit Mineral. When I'm talking about Mohit Mineral, there are two cases of Mohit Mineral. One case is of an High Court judgment which presently has been now questioned and it is pending for a final verdict. Whether the GST is applicable on the ocean freight when I'm importing the goods and paying the ocean freight, whether the IGST is applicable on that. That decision also I have covered in my deliberations, which will come after some time in the levy portion of it. This is another Mohit Mineral case which talks about the constitutional validity of the cess which has been applicable, levied as far as the GST is concerned. So many of you would be aware when the GST was being formulated or in the process of formulation of GST, they had a problem in getting all the state concurrence for the purpose of GST, because GST was a change from a origin-based tax to a destination-based tax. That means prior to introduction of GST, when I was making a sale of goods from the state of Telangana to say state of Karnataka, the tax which was being charged, CST at 2% with C forms or without C forms, whatever the full rate of CST was there, that was being going to the credit of the state where the tax is origin. So that is where it was going to the Telangana state. As far as the GST is concerned, they made it totally a different concept here, where they made it as a destination-based tax. So what happened is when the goods is sold from a Telangana to Karnataka, whatever the GST is paid on that, it is going to be the credit of the state of Karnataka government to the extent of SGST portion of it. The CGST portion anyway goes to the central government. It's a neutral to that extent effect. So one of the challenge with the government was having is that all the net exporting states, that is, were a various manufacturing hub, like it could be Tamil Nadu, it could be Gujarat, it could be Maharashtra, where there was a huge manufacturing and an exporting state. Exporting is exporting not outside India, but exporting outside the state. So these people had an apprehension that they are going to lose the revenue, because all these days when the sale was happening from Maharashtra, they were getting that revenue of CST, which is going to be lost now, and it is to be given to a consuming state, say Telangana. So considering this particular challenge in place and to get all these people in tantamount, there was a clause which was being given as far as the constitution is concerned, which the constitution gave a power to compensate the state when there is a loss which has been happening. So in lieu of that, they have introduced a particular act which levied the compensation cess. So now the compensation cess was not levied on every product. It was being levied on a limited product like cars, luxury cars, or maybe a sin goods like the tobacco. These are the things, maybe the soft drinks which we have. So these are the product where the cess was been compensation cess was been levied, not from the aspect of collecting more tax, but to compensate the revenue of those tax when there was a shortfall, when it was compared to the collections which was there in the VAT. Also, this was been promised only for initial 2 years or 3 years. This is now been sought to be extended also. I think it was there only for 2 years, and now they're looking at an extension of this. So this concept of the compensation cess which was been there was questioned whether it is constitutionally valid, because this is not levied as a GST, but it is a separate act which has been levied, whether there is a power which was been there levied at all. So there were certain observations which was made with the Supreme Court in case of Mohit Mineral when this was being questioned, where they told that there are two different levies, there is no overlapping. GST and compensation cess are totally two different levies. This was one of the observation. And then where the power is coming, where the question which was being raised as where is the power coming for this particular cess. So they made it clear that the Parliament has a residuary power under Article 248 of the Constitution, read with 246 and 246A. And even there is no specific entry to the Schedule 7 for refers to GST compensation cess. Even there is a lack of a specific schedule entry in the schedule, either in the list 2 or list 3. The residuary power of 248 of the Constitution is sufficient enough to levy the tax on the compensation cess. So this is what was been levied as far as this is what was held in this particular thing. Another question which came up was whether this clean energy cess which was levied prior to applicability of GST, that is prior to 30th of June 2017, whether if I'm having a credit of that, can I use the clean energy cess to offset the compensation cess? Then they told the legislation provision has not been given, the policy has not been given. Because there is no specific provision in the act, you will not be able to use that cess. So in toto, Mohit Minerals upheld the constitutional validity of the compensation cess which has been levied on a certain goods. So this becomes important for us to understand the constitutional power. Second judgment which I would wanted to discuss as far as the Constitution is concerned is the Dell Ice Cream Manufacturers Welfare Association. So in this case, what they went is to question the composition scheme not being made available to the ice cream manufacturers. So many of you would be aware that the regular payment of tax would be applicable when you are crossing a turnover of 20 lakhs or 40 lakhs, as the case may be based on the states. Once you are crossing that particular turnover, GST at a regular rate of 18% is applicable, which amounts to CGST plus SGST, a breakup of 9 and 9. However, there is a scheme to encourage a small time manufacturers or traders. There is a scheme which has been available for people who are doing a turnover up to 1.5 crores, where instead of paying a rate which has been specified, that is an 18%, they can go for a lower rate of tax, which is 1% and 5% and things like that. They have given separate slabs which has been given. So this particular compensation, the lower rate could be paid is an option which has been given. But this option, there is an exclusion which was made to the sin goods such as the tobacco or any other products which has been there. They told for this we will not give you a composition scheme, you have to pay at the full rate. So one among the product which was included here was also an ice cream. So these people went and questioned this particular levy, saying that why you are categorizing ice cream with a sin good, where the majority of the content is the milk. So which is also again, which has been exempted, and they don't get a sufficient amount of credit here. So thereby they questioned this on a multiple grounds. Then this plea was been heard by the Delhi High Court, where they have laid down certain ratios as far as the leviability of the exclusion of the composition scheme. One is that they say that legislation has vested the government with the final power for levying, exempting any tax, only limitations to act only as per the recommendation of courts. That is, they told that the act is free to levy whatever the tax and exempt whatever it is. The only restriction is that it should be through a recommendation of the council. So that is what they have given out here, which is very important for us to understand, because many of the cases we would be looking at a logic in the taxation. So why something is taxable and why something is exempted, what could be the logic? So unfortunately, there is no logic for it. There could be a basis, but there may not be a logic for it in the taxation law. So when we are looking at whether we can question this particular thing of taxing something, exempting something. So this is something which we need to keep in mind, that the legislation will be having a power. There is a government, it's been vested with a power to make something taxable, to make something exempted, and also to give something as an exclusion for whatever the things are concerned. So because of this, they held that it is leviable. They also made a statement saying that state does not have to tax everything in order to tax something, and it is entitled to pick and choose if it does so reasonably. So if there is a reasonability in it, it can pick and choose and tax what it wants and what it does not want. What important to note here is that there has to be some reasonability. It cannot be irrational. So that is something which could be still an open ground for us to look at. But if there is a rationale, some basis or some background for it, then they could be looking at. In this case, where the ice cream case, there was a report which was submitted and there was a reference to the minutes were there. So there was some study made and there was some reasonable reason for excluding ice cream from the compensation cess. So thereby, they did not go with the reasonability as far as this case is concerned. And they also commented the powers of the court, whether it can strike down a policy decision taken by the government merely because it feels that the other decision would have been more fairer, scientific or logical or wiser. So they say that this is not something which will come with the jurisdiction of the judicial review. We cannot consider that if it was not been excluded, it was included, a composition scheme would have been there, it would have been fair or a scientific, logical or wiser. We cannot go into that particular decision when we are looking at a validity of a particular provision. So this is what was coming out in case of Dell ice cream manufacturers. So although many of you would be looking at how this is going to help me in my clients, I may not be having much of the ice cream manufacturers, why this has been discussed. But these are all the fundamental things which comes out for any challenging of the constitutional validity or a levy which has been challenged. So these are the certain things which you should keep in mind, that when you are challenging it, you should be knowing that the government has a power, something to exempt and something not to exempt. So this is the reason why I'm sharing these case laws, which are landmark and has some essence which has been made. Then there is a decision of Dharmendra M. Jain. So there is a twin portion for this particular division, where one of the judge, the subject on which the decision was given is that intermediary service, whether it should be considered as an export or should be taxable. So I'll give you a small background of it. Say, most of us are aware that for something to be called as an export of service, especially I am on the service, I am not on the goods. Goods, we know that the export is taking of the goods physically from a location from India to a location outside India. So that is more or less because it's tangible, it's very clear. When it comes to service, they have given a particular definition for an export of service, where they told one of the condition, in addition to the condition that the amount should be received in convertible foreign exchange, the transaction should not be within a deemed distinct entity or a related party, deemed distinct entity, not the related party. So these conditions, one of the conditions they have told is the place of provision of this service should be outside India. Now it becomes very important for me to look at whether it is an export of service. The condition whether the amount is received in convertible foreign exchange or not is not the condition, the sole condition. It is one among the condition. If I'm getting a foreign currency receipt, don't come to a conclusion that it is an exempted. You still have to look at the other conditions which has been there as far as the export of service conditions are concerned. So for that particular provision, one of the things is a place of provision of service. So place of provision is a concept where they have told where the service is deemed to have been provided. So now when it is a service, it is arguable as to how a service, where a service is deemed to have been provided. Now, say for example, this webinar, I'm sitting here at Hyderabad, and I don't know where this Zoom server is located. The Hyderabad branch is hosting. Maybe people, Anil is there from Andhra Pradesh, Vizag now here, and he is listening to this particular webinar. Now, whatever I'm imparting the knowledge or whatever is coming out of it, whether it has been provided from here way because I'm physically having my location here, or because I'm having my office, say it was a billable assignment, I would have billed from my office in Hyderabad. It could so happen that I'm traveling in Bangalore and I could have taken this webinar in Bangalore also. So should be considered as Bangalore, Hyderabad, or the recipient which is there in Vizag. So this confusion is always there, and it is always very, very subjective. To remove this, there is a concept of the place of provision, a place of supply has been, a place of provision of service has been given, or the place of supply has been deemed to be a concept which they have done, where they tend to determine a place of supply of any particular transaction. Don't get into the logic of what is the logic for determining it. You have to go by what has been given under the Act. So in that the Act, they have given a deeming provision. If they say that if you are doing a particular activity, then this is the place of supply. In this scenario, this is the place of supply, that they have given a certain scenario. So one such scenario is an intermediary service. So intermediary service is to be understood as a simple broker or an agent, where they facilitate the provision of service or facilitate the supply of goods with two people. So say for example, I am located in India, and my client is in abroad who is a manufacturer. My job is to look at whether I can get a customer in India for my client abroad. And whenever my client abroad gets a business, he pays me a commission as agreed in convertible foreign exchange. So this is a typical example of an intermediary service. Now I am sitting in India, I am earning foreign exchange currency. Whether I can claim it as an export service, answer was no on a plain reading, because the place of supply for intermediary service is the location where the service provider. So now I am in India, so the place of provision of service is in India. One of the conditions of the export of service is not satisfied. You cannot treat it as an export. The moment you are not treating it as an export, it would be subjected to levy under the GST. So this was being questioned as far as the Dharmendra MGN case is concerned, and there was a dual decisions which was been given. The split decision was given. One of the member felt that yes, you cannot artificially tax, which is already something which is an export, and somebody else felt no, what has been taxed is right enough. It has to be taxed because the provision has been there to do that. So this is the slide which tells about the grounds which the justice, one of the justices has taken for giving the reasoning as to why it should be taxed. So where they're told whether a law or a provision is unconstitutional or not has to be decided by the court on a touchstone of a constitution. So everything has to be a concrete which is there in the constitution. You cannot go beyond the constitution. This is one of the beautiful findings they have given. The court should proceed to construe a state statute with a view to uphold its constitutionality. So you have to look at how to construct a statute or an act which is there in a view to uphold its constitutionality. You cannot read it down to say that it is not there as the constitutionality. So this is the principle in which the law has to be read, is what they have looked at. And the fundamental concern of the court should be inspect. There is a two condition they say. One is whether there is an existing of an enactment power, and second, to enacted power, whether it is within the right which has been given, whether the provision has been made within the right which has been given as for the enacting the power which has been given. So if these things are there fundamentally, then it could be concluded that the law which has been there, which has been made, is valid. So there they examined this and they went into depth looking at whether the constitution has given a power to make a provision with respect to the levy of the tax, of the GST and the place of supply of it and all those things. And they have come to a conclusion saying that it cannot be an export of service because it is within the constitutional framework of the law. So that is the one judge opined. The other judge told is that Constitution does not empower imposition of tax on export of service out of the territory of India by treating the same as a local supply. So this judge went into a basic philosophy saying that when the service recipient is outside India, that it is specifically outside. The previous judge, I failed to mention that the previous judge also made one particular comment that when there is a specific provision, you cannot go for a general provision. So the specific provision for intermediary, when it is there, you cannot go to a general provision saying that your recipient is outside India and you cannot tax it. I failed to mention that. So here they have not looked at a specific or a generic provision. They have looked at, you forget about all these things, whether the service was not been exported, whether the recipient of my service, is he not outside India? If answer is that the export in general cannot be taxed, considering this as a local supply. And they have also looked at, there is an express bar which has been given under 286(1), that there shall not be an imposition tax on supply of goods or services when that is taking place in the course of import into or export out of the territory of India. So there is a specific bar which has been told. But the issue comes up is what is an export there, which has been mentioned in 286(1), whether that export is the same export what I have to read from the GST point of view is a small contradiction which is coming there. So they've also told that by artificially creating a deeming provision where the location of the recipient when intermediary outside the place of supply has been treated as a location of the supplier, that is in India, this runs contrary to the scheme of the GST Act as well as the IGST, besides being beyond charging section of both the acts. So they have told that you cannot artificially deem a particular provision which is outside the purview of a basic fundamental provision, that the export cannot be taxed. So based on this particular thing, they have concluded that it is not taxable. They have also made a reference of two important reference which has been made, although not in a very context of this constitutional validity, which is very, very important here. There was a decision of a Gujarat High Court, which is, I'm coming into the next slide, which is the Material Recycling Association case, where they have already upheld the constitutional validity in the Gujarat High Court. They have already upheld. So while the Department Council argued that it is already settled and there is a dispute, they have made these two observations, which is very important because this is something which off and on I keep on getting query with many of the professional colleagues. Whether there is an High Court of say Madras or this Gujarat High Court or a Mumbai High Court which has been given Maharashtra High Court, whether that is binding on an officer who is there in Telangana or an High Court of Telangana. So this is a question which always keep on coming. So whether one decision of an High Court has to be binding on the other High Court decision, they say it is settled proposition. The decision of one High Court is not binding on another High Court. It is independent to take a thought process, although that decision will have a persuasive value, but not on a imposition. It cannot be imposed. So this is what something which they have observed here. Then they have also looked into a territorial jurisdiction. In other states or outside the territorial jurisdiction of High Court, it cannot best have only, it can only best have a persuasive value, not a binding precedence. So this is very important for us to understand when we are looking at a Madras High Court decision or a Mumbai High Court, Ahmedabad High Court decision. The ratio which they are giving on is the same act which applies to my state also and entire India also. So that ratio cannot change, but it may not be binding on an officer here, but the ratio which has been there, which will be equally applicable. And for the purpose of judiciary making, it will have a persuasive value. They can always say that I am not binding with this, and they can take a different value. So this is what something which we have to very carefully look at, because many of the cases, when you are referring to many of the case law, our superintendents or somebody says that this is not Telangana High Court, I need not consider it. So it may not be binding on them, but the ratio cannot change. If the ratio has been held that it is not taxable in one state, it cannot be taxed in another state. So that inequality cannot be there unless until the courts differ it otherwise and give a reason, and then it goes to a larger bench or a Supreme Court for settling it. So only in case of the dispute, you have to look at this differently. But if it is unanimously that it has been agreed by the department has not appealed against this High Court decision, that there is an acceptance of the department, if it could be proved, then it could be equally applicable to all the other states and the jurisdiction which would be applicable. So this was on that intermediary service. To follow the intermediary service, there was another decision of Material Recycling Association of India and Gujarat High Court, where they told that they also told that there is going to be a double taxation. So they have given a very finding which may not be logic, but this is what they have looked at. I'm reading of the logic which they have given when they argued that there is going to be a double taxation if you are taxing the intermediary. They told the contention of the petitioner that it would be to double taxation is not tenable in the eyes of law, because the service provided by the petitioner as an intermediary would not be taxable in the hands of the recipient of such service. It is on the provider, not on the recipient. But on contrary, a commission paid by the recipient of service outside India would be entitled to get a deduction of such payment of commission by way of an expense, and therefore it would not be a case of double taxation. So that is what they have told here. So basically, the double taxation which been there here in this particular facts, they have made this as a recipient category. But what happens as far as the double taxation is concerned is that, say for example, it would not be an intermediary case, but the other case could be that the repairs of a goods which is happening. In that case, the place of supply is where the goods are made available for the purpose of repair, and that is what is happening. So I have a customer, I have a client abroad, and he has a customer in India. So he has supplied the goods here, and he is running an AMC contract, and the entire amount of AMC paid, the client in India is paying under reverse charge mechanism. When there is a repair call happens, instead of people traveling from abroad, they have appointed me to go and do a service. So when I'm going and doing a repair service, I'm not traveling abroad. Amount is coming in convertible for each exchange, because the goods are there located here. I will again charge the GST on that. So there is a double taxation to this effect. So this is what was tried to explain by this particular assessee of Material Recycling Association, where they have told that no, you only look at from your transaction as a recipient basis. He is not paying, you are paying, and whatever you are paying is given as an exemption in his particular country for that. So thereby there is no double taxation, is what the conclusion which has been given by the Gujarat High Court. So that was on the intermediary services. So moving on to the refund mechanism which has been there here. This is coming. Slide has been mixed up. I should have taken this slide after explaining you the Mohit Mineral case, but nevertheless, Mohit Mineral gave a verdict saying that you need not pay an IGST on the ocean freight under reverse charge. You need not pay when you are importing the goods. So that was held. So once the Mohit Mineral Gujarat High Court decision was come, lot of people who have already paid the GST on this particular transaction went for a refund of it. Now the department officer rejected the refund application, saying that you are claiming a refund beyond 2 years, where the section 54 of the GST Act provides only a time limit of 2 years for taking the refund. So now this particular thing was being questioned. There are two things which was being argued here. One is that you have to understand that Article 265 of the Constitution shall not empower the government to collect a tax without the authority of the law. So no tax shall be levied or collected except by the authority of the law. So that is what has been provided under 265. So when it has been held that the IGST was never payable, it was never leviable, when it was very clearly been held, then how can you collect or levy a tax on it? So what has been collected without an authority of law is not a tax at all, and revenue is bound to refund the erroneously collected amount. So that is what has been given here. And they have told 54 will apply only for the purpose of tax. It will not apply for amount which is collected without the authority of the law. 54 will not apply. So thereby, any case where it has been held by the court that it is not leviable to tax, you can always go for a refund of tax, even if it is beyond a period of 2 years. So this is something you could keep in mind. This is not only applicable only for IGST and ocean freight, although it is directly on this subject. The ratio is very clear. If it was not at all taxable, the time limit will not apply. Although there is the Mafatlal industry case laws, which talks about a lot of things which has been there, which is well settled principle. This is one of the provisions which has been there. It could be argued either ways. There are a number of case laws which also say no, the time limit applies because you had assessed it as a tax. Once you have voluntarily assessed it as a tax, you cannot go back and take a different time for the purpose of payment of a refund. So there is a contrary decisions which is available, but this is a fair chance for us to go for a refund. Many of the cases, there is a retrospective exemptions which has been given, or there is a clarity which is coming out after a later date that this was not supposed to be paid in the past. So in all such cases, you can look at two things. One is that you could look at paying under protest so that you have been protected by the time limit is one, and it is naturally protected. A few people may harp on me saying that, Sudhir, show me which is the provision under GST which is talking about payment on protest. It is all the principle of the natural justice which has been there. It is a principle laid on in any provisions of the act which has been there, need not be specifically coming out in a particular provision. So that is something you could look at. And second is, as long as the incidence of tax is on you, if something has been exempted, you can always go for a refund of it. So this is the thing which you need to keep in mind whenever there is a refund which has been happening. Then there is a decision which talks about the auctionable claim and the taxability of the lotteries concern. So Article 366(12), which is giving the definition of the goods, has made it very clear that the goods should be something which is movable, and they have come to a conclusion that the lottery is an actionable claim and constitute goods or a movable property. So it is a goods and a movable property, which is within the meaning of auctionable claim. And they have also made a reference to the Schedule 3, which is neither supply of goods nor supply of service. And they have told that in this particular thing, auctionable claims are excluded except for the lottery. So thereby, because it has been specifically excluded, it is been levied and tax becomes taxable. So the state governments can classify the lottery as goods and tax it is the thing which is coming as far as tester distributors is concerned, when it is directly coming to the lottery ticket is concerned. This is another case which is coming as far as the mandi tax or the things is concerned, where the levy was governed by only those enactments which are listed under 174, section 174, but are abolished. Market fees is levied and it is not mentioned in that particular section. So there were certain municipalities and the agriculture boards which they were levying the mandi fees or a mandi tax which was being collected. So question came up is after the GST coming, whether this cess fee or tax which has been collected, whether that gets repealed. So they made a specific mention of the Mandi Fee Act, the act which has been given there, and they have told that it has been specifically levied there, and this particular act was never been subsumed under section 174, which has been savings and rippling provisions which is given. So thereby, this is something which is taxable. So that is been coming as far as the Mandi tax is concerned. So the next provision, which is very interesting here as far as the Columbia Asia decision is concerned, which is a advance ruling and not a case law. So I have covered the advance ruling. The topics which was given to me is also to cover the advance ruling. And there is a ocean of advance ruling. I have not tried to touch all the advance rulings which is applicable, but I have picked a few, but few of the advance rulings which could be applicable on some regular basis for many of the chartered accountants who are practicing. So that is what I have tried to pick the advance rulings. And one among these advance ruling which is having a huger impact, not from a favorable point of view, from a negativity point of view, is the Columbia Asia hospitals. So where this Columbia Asia had they had something called as an IMO office, which was an internal marketing office or something. They had a particular office. So that particular office was an outsourcing office of all the accounting, treatment, and security services. All those things was being accounted from this particular office. So the question what Columbia Asia asked is that I am incurring these particular expenses at my Karnataka registration, and but I am having hospitals across many other states. So the accounting is done centrally here. Now, whether this entity, the Karnataka registration, and the entity which is outside is two different entities, the same registration of Columbia Asia only registered separately is treated as two deemed distinct entities for the purpose of applicability of GST. So now, whether I should be charging GST on this accounting services which has been centrally done was the question which was been asked. They also asked about the CFO remunerations and things like that. The employer relationship was been asked, and unfortunately the advanced ruling authority ruled saying that yes, you have to pay, and it was upheld, and the appellate authority also gave the same verdict here. So here what we have to look at is that it has to be, it is having a wider impact. If you look at many of the cases, the HO will be in one state and their manufacturing or depots will be in various other states. So the CFO or an accountant or a CEO and many other marketing employees, marketing head, all those people will be stationed at HO, and they will be paid a good amount of salary. And their responsibility is not only the HO to take care of the entire organization. As a part of their organization, when they are doing something for the depot or a manufacturing unit located in another state, then to the extent of that particular service which has been provided, the strict interpretation of this AR says that you have to pay GST on that. So this is something to do with the stock transfer. All of us are aware that when I transferring a stock from my own company, one unit to another unit which is having a different registration within the state or outside the state, mandatorily different registration. So when it has been transferred to another registration of my own entity, you have to pay GST. Most of the people are convinced with this fact, and the GST has been paid on it. But what happens when the service is been provided there? So that also should be subjected to tax with this ARR says. Although there are certain decisions, there are certain grounds for us to fight this particular argument, saying that it's not correct because there was no employee service which was, there was no any support service which was been contracted by two entities, even artificially or otherwise, for providing these sort of services. It is the responsibility which the company has to do in terms of accounting or having those sort of an operational team in place. So that was all captured at one particular location, and the cost has been incurred there. So there are certain grounds which has been available for us to fight it out. But take it granted that every audit are looking at this sort of a thing. The Columbia issue is a favorite topic of the GST auditors who are coming, and this is wherever you have this multiple units, this is, you can take it granted that this is something which they are going to ask in your audit calendar. So a few things could be worked upon in this particular thing is to look at if the recipient entity is eligible for it. Unlike in Columbia Asia, the recipient entity was an hospital, and most of you are aware that healthcare services is not subjected to GST. So because of that, when I'm taxing from Karnataka to say Telangana, that becomes a cost in Telangana because they'll not be able to take a credit. But whenever they are able to take a credit, the recipient is eligible to take a credit, you could always look at charging a nominal value, because whenever the recipient entity is eligible for taking a credit, full credit, mind it, full credit, not proportional credit, when they are eligible for a full credit, then they whatever the amount which is charged on the invoice is a deemed open market value. So thereby, whatever a nominal value you are charging, charge it, and the recipient entity will take a credit. But if the recipient entity is partially taxable, partially exempted, they are not eligible for full credit, then you have to ensure that the transfer pricing is at an open market value. So you could look at wherever there is an exempted services, or where there is a large amount of exempted and less amount of taxable services. Only in such case you could look at challenging this particular ratio of the Columbia Asia which has been required, which is easily doable, which we need to consider it. So, but this is something which each of you are going to face for your clients wherever they are multi-locational over a period. This is something which is to come for sure. Next is the Mohit Mineral case which I was referring to. So the facts of this particular case is like this: is I'm an importer of goods. So when I'm importing the goods, there are two options. I can have a pricing with my customer abroad, vendor abroad, when I'm importing the goods. One is that I can buy the goods at FOB. That is, say, if I'm importing from Singapore, the goods would be delivered at the Singapore port, and all the expenses incurred is of mine. Second is that it could be a CIF value where it will come including the cost and insurance and freight to my location. So there is a customs duty which has been levied for the purpose of customs valuation. The C and IF also to be included. That is the insurance, freight also to be included in the valuation for the purpose of customs. How to value and all those things, the customer has been dealt with it. So the ratio was that the recipient is taking this particular service. It is an addition to the goods value which has been imported. It all goes to the value of the goods and it has to be paid tax. So anybody who was importing the goods was very clear that he was paying customs duty, BCD and CVD SAD prior to introduction of GST. Post introduction of GST, the BCD remained as is, and the CVD SAD was been merged into an IGST. So the people were paying the GST on that. There was another notification which was given under reverse charge mechanism. Few people would be knowing what a reverse charge mechanism is. In general, the service tax or GST was supposed to be paid by the service provider, collected by the recipient. But in case of a reverse charge mechanism, the recipient himself has to pay the tax. So the recipient of the service himself has to pay the register and pay the GST. So there is a reverse charge notification which was given for an ocean freight. The RCM is going to be applying. So you have to pay the tax. So the question came up is that when it has been already there as far as the customs valuation, whether it has to be paid again. Second, they've also looked at who is the recipient of the service. In most of the cases when the CIF is happening, the recipient is not me at all. I don't enter into any contract at all. The contract has been entered with the customer who is my vendor who is abroad, and thereby he becomes a recipient of service and I will not be a recipient of service. So considering these points, the Gujarat High Court held that the IGST will not apply on an ocean freight. But this decision is under review now before the Supreme Court. It has been challenged before the Supreme Court, pending a final verdict. As far as this is concerned, it could be coming any moment as far as this particular case law is concerned. So this process makes the GST a tax on a they have come up with a few fundamental things of the observations as far as the Mohit Mineral case is concerned. They have told GST is a value-added tax. At each tax, it has to be paid, and the ultimate customer will pay on the entire thing. So there cannot be a double taxation. So they have told that the delegated legislation as in mind the provision of the Finance Act. So it cannot go beyond the Finance Act. The notification cannot go with the Finance Act. They have also told that it has to be paid by the foreign exporter, and he becomes a recipient and I will not become a recipient. So therefore the recipient of the service, if he is a foreign exporter and not in India and it will be outside India, So thereby, based on this ground also, the ocean freight GST should not be applicable. So this was the decision as far as the Mohit Bindal case was concerned. So the other case on levy is on the duty-free goods which has been there. So most of you would be aware when anybody would have been traveled on an international flight. So there is an immigration check which happens, and after you have completed your immigration, and there are certain shops which is called as a duty-free shops. So this area is treated to be an area beyond the custom frontiers of India. That is, it has been treated as an area which is outside India. So thereby, any trade which is happening in this should not be subjected to tax. So a lot of stuff like the cosmetics, the toys, and various other things has been stalled at the duty-free shop, and this was not subjected to GST. So there was this the A1 Cuisines Private Limited. They have went to the department saying that they're a Nagpur-based company, where they tell that why this domestic security hold area also it cannot be applied. They told no, anything before immigration, you don't have a control whether this person is crossing with the immigration, is taking a domestic flight. So you don't even know where the goods is actually going out. So thereby this exemption would not be applicable for the domestic security hold area, but it continues to apply post the immigration is concerned. So this is the decision which has been given, and many multiple decisions have come after following this particular decision. So that is on A1 cruise. So next thing was on the entertainment tax and GST applicability. So there is Balaji Theatres. They went to the Madras High Court, where they told that they are being levied under the Pondicherry Municipal Corporation Act or something. They have been levied of 20% of entertainment tax. Thereby, that if the entertainment tax has been levied, and the GST is also levied on the admission to the entertainment event, because the GST of 18% is already paid on the ticket, I need not pay entertainment tax on the municipal levied entertainment tax which is there on the tickets. So they have told that the municipal entertainment tax which has been levied is not been subsumed under the GST, and only what was subsumed was the advertising tax. So they told that the entertainment tax is levied, it is not been subsumed. Second, they also clarified that cannot be a double taxation, because there are two different aspects of a transaction. There is the same transaction, but it is having a two different aspect. One aspect is that providing an entertainment. Second aspect is providing an admission to such entertainment events. So these two are two different aspects of a same transaction. Thereby, the entertainment tax and the GST is both are going to come wherever there is a municipal entertainment tax which has been levied, not the state entertainment tax which was levied earlier, which is subsumed. Then there is a advance. Sorry, this is also a Gujarat High Court decision which has been there, where there was an hospital, and they were doing the healthcare services at a very nominal price. They also had a pharmacy, and the pharmacy was selling not for an high margin. They were giving the medicines at a very, very reasonable price. So the question came up is that whether this charitable trust, which is registered under all this 12A, ATG and all those things, whether they selling the medicine at a reasonable price, whether that should be subjected to GST, whether they are supposed to take a registration. So that was the question which had come up here. So there they have referred to the definition of the business, which is defined under the GST Act, where the business definition, if you look at, they have made it very, very wide. First, it says that any trade, commerce, or service, anything which is happening is a business. Second, they say anything incidental or auxiliary to such activity is also a business. Third, they say whether or not for pecuniary benefit, that is whether the intention is to make the money or not, still it becomes a business. So thereby, because you are in the business, this charitable activity, the character, whether why are you making a money, is it for taking home, or whether you have an intention to make the money or not, is irrelevant, because you are making a sale of the pharmacy. You have to pay the GST on that, is what has been held. So again, this decision can be countered. It could be argued saying that you need to look at business in its actual sense, that anybody does in business only for making a money. If somebody is doing a sale of a product, doesn't make a money, whether that can be considered as a business is something there is a scope for somebody to argue on this beyond this decision of the Gujarat High Court, which has been given. Then there was an advance ruling in case of Zaver Shankarlal Banushali. So here this was an advance ruling of Maharashtra which came in, where there was an agreement which was been given with the customer, or it was not with the customer, it was a redevelopment project which was happened. There was an existing building. There was an existing building, and that existing building was been redeveloped into a new flats or extra flats or whatever, with the additional FSI which was being done. So this contractor or a developer, as the case may be, had an agreement with this society where they told that I am going to do a completion of this project in our 24 months with a buffer of another 12 months, maybe 36 months I am going to do. And if I am not able to do it within the buffer time, then I am going to pay you a amount which is going to be a compensation for the delay which has been handing over, and which will take care of your rental expense. Because the challenge which came up here, the people came up with, is that I had my own house, now I am vacating it and giving you on a redevelopment. So that is putting me on a cost of going to a rented premises. And if you are delaying this consideration, I will not be able to pay rent. Especially a place like Mumbai, which is very costly rental premises. So these sort of a clauses were been included. So now in this particular case, that the rent was being paid, whether that whatever the rent which has been paid for delay in handover of a position, whether the GST applies on that in the hands of the people who are receiving it, was the question which was been raised here. So the advance ruling authority told, yes, you have to pay, because that is a consideration for tolerating an act or a situation, is what they have told. But it is very important to look at the advance ruling decision, and mind it, advance ruling decision is binding only on that applicant. That ratio is also not binding anybody, but it is having its own persuasive value for the department to issue a notice on it. But only it is binding on that particular officer and that particular assessee which has been there, only on that fact. If there is a change in fact, change in transaction, again it will not be applicable. So many of the advance ruling will be contrary, but I am bringing out all the contrary advance ruling also to keep you posted that this sort of an issue is going to come. So this is very important, because don't only look at a rental compensation here, there are n number of clauses which been there in the contract, like your LD charges. LD is late delivery charges, which has been recovered. There are certain compensations which has been given as far as the penalties are concerned, or late fees are concerned. So many other things of contractually would be there. So whether all this amount would be subject to a levy of GST in the hands of the recipient of this consideration, very important. Other than which this advance ruling has not considered, it was not been argued. You have to look at the Contract Act here. The Contract Act has two different concepts altogether. One they have called as a consideration towards the contract, which is covered under section 2D or something, and another is the compensation, the damages for breach of a contract. So there is an amount payable as a consideration for the services or the goods which has been to be given. There is also an amount payable in case of a breach of the contractual terms which has been happening. So the breach of the contract, damages, special damages, normal damages, whatever has been provided, it has been provided not to compensate for that particular service which has been received or delay which has been received. It is given as a deterrent for not for violating of the contract. It is more of a penalty in nature. So if you can bring these clauses very clearly as a damage clause or a breach of a contract clause,
it is very easy for one to argue saying that it's not a consideration for tolerating an act, but it is the contractual remedy which has been available for a breach of contract which has been provided under the Contract Act, which will not be subjected to GST. So we have got certain rulings which has been there as far as the Commissioner Appeals in Hyderabad itself, who has given this verdict saying that the breach of contract cannot be a consideration, and thereby no GST should to be paid. The decisions are available. So these are the things which you could argue against this sort of an advanced ruling. Again, please take this. These are the things which is going to come in your audits, inquiries, or whatever the assessments, or there's no assessments in GST, but whatever the investigation and things like that. These are the things which are going to be pop up. So one has to be prepared with this particular arguments as to how we are going to tackle this scenario. Next is the manpower services which has been given for the panchayat or a municipality is concerned. So there is a specific exemption which has been given. Whatever the services which is been entrusted to a municipal authority or a panchayat which is covered under 243W W and 243G of the Constitution. So those work which has been provided to a municipality or an panchayat would be exempted from a GST. There is a specific exemption notification which has been given. There is also a notification which is giving that it has been considered as neither supply of goods nor supply of service when it has been provided to a municipality for that particular function which is interested in 243WG, as the case may be. So that is what was examined here, and they told the manpower services which you are giving to a government department, which is these manpowers are working to do that obligation which has been given there, it will not be subjected to tax, which is exempted, and in all other cases it will be taxable at 18% supply of manpower is given. So this particular thing which could be used not only for supply of manpower, it could be any services which is there, which is in relation to execution of that particular function. So one of the thing which we were opening, that there was a renting of a premises for such sort of a local body, which was there in the river redevelopment and things like that, which was coming within the purview of 243A, 243W, which was coming within that purview. So a renting of immovable property for that would also be considered there, because the service is nothing but to enable them to provide that particular services. So you could go to that particular extent. And another important thing you have to look at is sometimes you have a taxable and non-taxable. You have to examine the notification which says that it is neither supply of goods nor supply of service, in which case it will not be considered as an exempted supply for the purpose of reversal, proportionate reversal under Rule 42 and 43 of the GST Act. If it is treated as an exempted, then you have to do a proportionate reversal. So you have to carefully look at which is the notification which is going to be falling, what are the restrictions which has been available. There is an overlap in this particular exemption notification and exclusion of supply of goods or services notification is concerned. So that has to be carefully looked at, and the proper implementation of the act of the GST may have to be considered. Then there is a decision of renting of commercial property. This is what I was referring to, that in this case there was a renting of immovable property, but it was being given to Tamil Nadu Welfare Board to the government or a business entity, not exempted. So it was given by a local authority to a business entity, so which did not qualify as an exemption. So applicant is not covered by the definition of the local authority. They told you are not at all coming under a local authority definition. The Tamil Nadu Welfare Board is not at all coming under local authority, because it's not satisfying the definition of a local authority has been given for the purpose of constitution is concerned. So thereby they held that this exemption is not applicable. Next is that most of us are aware that the education which is been recognized under law, or education up to the primary and secondary education, whether recognized or otherwise, beyond primary secondary education recognized by the law for time being in force, that education is exempted. Now the question came up in case of Logic Management Training Institute, and ARR application was been made before the Kerala Advanced Ruling Authority, where they told that I am doing a coaching services of CA and CS, what I'm doing is nothing but an education, and CA is a degree which is the qualification which has been recognized by ICAI, which is an act under the parliament. So thereby I should be given an exemption. So what they told that the private coaching institutions for CA and CS will not be considered as an education institution to avail of the exemption, because the education is the per se the education institute has to be recognized by an university or something to be empowered to authorize to provide impart such education, which typically happens in a school or a colleges, where they make an application to the grants the UGC, or they make an application to the university, and they get a proper authorization, and thereby they become an education institution by itself, and thereafter they impart the education which has been exempted. So in this case, this coaching center has no affiliations, no recognitions per se. So thereby what they are providing is only a coaching and not an education institution, although there is a typical imparting of the education of that particular subject which the imparting is happening. They still told that it is not coming under the education. So that is this particular provision which has been there. So another question which keeps on coming up is that once I'm an education institution, any service provided to its students is exempted. So there are some integrated courses which is happening nowadays, where I'm giving a CA coaching along with my intermediary education, that is the pre-university education or intermediary education. So I have been affiliated with the board of the intermediary. I have been recognized there. I am recognized to give an intermediary certificate. So I become an education institution. Being an intermediate education, I'm also giving a CA coaching or an IIT coaching or whatever coachings which has been given. Whether that is also exempted, the exemption notification can be interpreted so, because it says that once you are becoming an education institution, to become an education institution, you should be providing a degree which has been recognized for the time being in force, or you should be imparting the education. The moment you are becoming an education institution, any service provided, whether it is an education or a coaching provided to your student, would be exempted. So this particular interpretation is also available wherever there is an integrated education institutions which has been there, which is happening. Next, there is a recent judgment as far as the Karnataka High Court is concerned, in case of the race clubs which have been there, which was Bangalore Turf Club and also the Mysore Race Club, made this petition in the Karnataka High Court, where the issue which was coming up is that there was a rule 30A, if I am not wrong, or 30A or 31A, which talked about a valuation for the purpose of payment of GST in case of a totalizer commission, where they told whatever the bet has been placed. So the horse races which happens. So when the bet has been placed, the totalizer collects the bet based on the ratio which has been there. He gives an odds based on that, and a bet is collected. He becomes a custodian of this particular money, and whoever wins the bet based on the winning odds, viewer is getting that particular bet. He deducts his commission, and on the balance is been paid to the punter who has done a betting on it. So question comes up is that whether the GST is applicable on the entire pool, or GST should be there only on the commission which has been received by this totalizer. So in this particular judgment, they have told the clubs will be liable only on the commission on the totalizer and not the entire bet amount which has been placed. So thereby, the GST, say for example, there is a bet of 1 lakh rupees which is happening as a pool, bet by many people. 1 lakh is a pool which has happened, and I get a commission of only about 10% of that, which is coming to 10,000 rupees. Before this decision, GST was applicable on 18,000. Although my commission is 10,000, I have to pay 18,000. So out of the pool money, I deducted my 10,000, again in 18,000, 28,000 was deducted and the balance was given. So this decision says, no, you only deduct 10,000 and 1,800 on that, 18% on 10,000, 1,800, 11,800 you deduct and give the balance to the winner who has who has bet. So that is what this particular decision which has been there. So this also, I think, has been now again appealed. There is a stay or something which has been given as far as this is also concerned. We have to see how this law is going to be developed. Appears to be a more logical way the principle has been put across. So next decision which has been there here is um, very important decision, because most of the people would be having this query because of our clients being in many of the association. We as a chartered accountants only staying in many of the associations, and many of the people who are their friends, relatives, everybody will keep on calling and asking this particular thing. So there is a concept of the maintenance which has been collected by the Residential Welfare Association. So when a residential welfare association is collecting this particular contribution towards the maintenance expenses, which is commonly collected, first question arises is whether the GST applies on this account. So there is a concept of principle of mutuality, where the Calcutta Club and all those things have concluded that you look at what is happening in a concept of mutuality. Each apartment or each unit holder was supposed to pay for the security services which is there, water which is there, electricity is there, cleaning which is there. They were supposed to pay. Instead of they directly paying to the vendor 100 units or 500 units or 50 units, paying directly to the vendor, they pool everything and the association makes the payment. So that doesn't mean the association is provided service to its member. So thereby no GST should be applied. So this, to overcome this particular decision, there is also some amendments which has been given as far as the law is concerned, where they have given a retrospective effect to the law, and they have made certain changes for deeming this service to by a association to members as a service. They have also inserted an interesting explanation. We have to see whether it will hold the test of the law, where they told that this particular provision will not be done away with any of the decision of the courts also. It cannot take away the decision. That means it superrides a court decision also, and I want to collect the tax on it. So that is how they have coined this particular provision. Even now, all these things could be questioned. There could be still tried out, because Calcutta High Court is a very solid decision which has been given. It could be still tried out as far as the GST is concerned, but there is a retrospective amendment which we have to look at how to tackle this. So subject to that, the second thing which comes up is that if it is a residential welfare, it is not applicable to any other trade association, clubs and social clubs and all those things. It's not applicable. It is applicable only to a residential welfare association, where there is an exemption notification which has been given 12/2017, where they have made it very clear that any services you are taking up to 7,500 rupees per unit per month per member, or per unit per month per member, is exempted from tax. The question came up is, if I'm collecting 8,000 rupees, should I pay GST on 8,000 rupees, or should I pay GST on 500 rupees? That is, up to 7,500 I'll claim an exemption. Beyond 7,500, only 500 rupees I'm going to take an exemption of it. So this decision of Greenwood Owners Association has made a right interpretation of this particular notification, and they have told up to 7,500 means that only in excess of 7,500 you have to pay GST. That is, in my example, you have to pay GST only on 500. First 7,500 you can claim it as an exemption. So this is a very beautiful judgment. Many of the association, majority of the amount will go off if 7,500 is there. Many association could be less than 7,500, no problem at all. But 7,500 is a good relief. That this will also come with a challenge with because you are paying on 500, are you eligible for taking input tax credit? What input tax credit I have? Security services charging me GST. I have a lift AMC who's charging GST. I have an housekeeping agency who's charging me GST. N number of people are charging me GST. Whether I'll be able to take the credit? You will be able to take a credit 500 divided by 8,000 in that ratio. Whatever the amount has been paid, that is taxable value divided by exempt total value. 500 divided by 8,000, you will be eligible to take an exemption of it. So this is something which you have to carefully look at. This could add value or may not add value also, because based on the credit mix which has been there as far as this organization is concerned. So next comes up is the deduction of the 2/3 value of the land. So most of you would be aware that the GST is levied on the construction of the residential and commercial apartments, and it has been sold. prior to completion certificate, it is leviable. Post completion certificate, no GST is applicable. So they have considered a particular aspect saying that when a sale of an apartment or a built-up area, commercial built-up area is happening, it also happened with an undivided share of land in that. So the GST collecting on the entire 18% may not be justified. So thereby what they have given a 1/3 deduction of a value towards the land. Practically, people are not applying 1/3 deduction on the value. Technically, 1 lakh rupees, I'll deduct 1/3 and charge 18%, or on 1 lakh, I charge 12%, is one and the same. So 1/3 you apply either on the value or on the rate, it gives you a same result. So people straight away are going at 12%, but the 12% is coming after deducting of 1/3. Or the new 5% is there, that is also coming under 7.5%, and 1/3, if you look at a rate notification, it says 7.5% or 1.5%, and thereby 1/3 if it has been deducted, then it comes to 5 or 1, as the case may be. So this is the provision which has been there. So in this particular Tamil Nadu AR, which was been asked in Kara Property Ventures, they had made a separate agreement for sale of undivided share of land, and they had entered into a separate agreement with the construction services. So the AR told, and they wanted to pay GST only on the construction service at 18%. So this AR told, no, you have to club both. After clubbing both, you take 1/3 deduction. On 2/3 on the both the contracts, you have to pay GST at 18%. So this is the verdict which has been given. This is the ruling which has been given as for Kara Property Ventures Limited. This could be looked at. This could be debated. You could look at the constitutional validity of it, which has not been looked at as far as the ARR is concerned. But this is a very good case study for us to look at. I principally feel what Kara Property Ventures has been doing is still doable. Subject to this AR which has been there as a contrary, there is a sufficient ground, because when there is a sale of land, an unconditional sale of land, very important, when your agreement is very clear that there is an unconditional sale of land, and the land value is been clearly determined, agreed upon, and it is on an arm's length price, it's not been influenced by any other contract price or something which has been there, then that is clearly covered under my schedule 3, which says sale of land should be treated neither supply of goods nor supply of service. So this is what something which is very clearly coming out. Thereby the construction contract should be subjected to GST. But a very, very clean proof of doing and to overcome of this particular thing, I'm not very sure whether it applies on a flat projects, or that is the apartment projects, but it is easily doable as far as the villa projects are there. Is that you execute a sale deed, make the customer as a owner of it. Once the customer becomes a owner of it, thereafter there is a construction contract which has been given. Thereby, then there will be no link between two. One contract has been concluded, then the second contract has been entered. These two cannot be merged together. So independent treatment has to be given. But very important, you have to look at that sale should be an unconditional sale. You cannot say in that sale deed is that I am selling this land with the condition that you have to get a construction with me, then still you will be under a challenge. It should be an unconditional sale of land. It should be very clear that I am selling a plot to you for X consideration. After the plot has been sold, then you will take it as a construction, and then you do the actual construction. That is something which is doable, and a lot of money could be saved, because you will not be forced under mandatory 5%. You can go under 18%. You can take the credit, because there is a lot of construction credit which has been available, and the majority of the value which is land, which you can keep it out of the GST method. So this is something which is doable. Next, you have the cost of diesel incurred for running the DG set in the course of DG rental. So there was a DG rental which was collected, and they were also recovering the cost of the diesel. They told all put together, it is nothing but a consideration for doing a DG rental services, and thereby the GST has to be applicable at 18%. The scenario would be different if I'm only giving you a DG set and saying that my scope of service is only to give you a DG set. I'm not bothered about the fuel. It is your responsibility to fill the fuel, and you have to run the DG by yourself. It is very clear only on the rental GST is applicable. There could be a second scope where it says that I will give you a DG set. I will also run for you with my person being there. But fuel is never my responsibility. Whatever the fuel is there on an actual consumption basis has to be provided by your people. So if my scope itself is restricted, the fuel is not there in my contract. There is a circular which says in case of the molds and all those things, they have discussed this, and they are telling that the value which is not there in your scope need not be added here. Only on your rental, along with that person who is there, that could be subjected to GST. So that is something which you have to look at beyond this, the Karnataka AR ruling in case of goodwill. The next ruling which has been there is that there was a scenario where the employees were recovered the car parking charges from their salary. So the question came up is that whether this is a supply of service by an employer to an employee, where they told the value of supply would be nil, subject to fulfillment of the condition as may be prescribed under the pure agent. So they have told that because it's an actual recovery as a pure agent basis, you need not pay the GST subject to a condition. That is what iron trading in case of AAR has been as told. So you before getting into this, there is a fundamental question which is going to come up, is that there is, first of all, when I'm giving a recovery of car parking charges, or I'm providing that I'll give you the car parking charges, whether that is subjected to a service provided by an employer to an employee, if free car charging charges is given. There is a circular which says that if it is in exchange of a consideration towards your employment service, then that will not be a supply which has been done, but it is in exchange of an employment service, which is not, it is in a settlement of your employment service which is taken, which is not subjected to tax. So that is something which could be looked at here. They have gone one step ahead and say that even if it is a supply, I am recovering this money as a pure agent. So I am recovering this, whatever I have paid to my particular vendor for car parking, that is what I am recovering from my employee, which is on an actual basis. Thereby, I have not provided any services. He has not paid me anything. It is only a pure agent service. So here again, he is putting back to the conditions. One of the conditions which needs to be fulfilled is, one, there has to be a contractual obligation between the employee and the contractor who is giving the car parking. And there also has to be a pure agent agreement between me. There has to be a principal supply, and this should be a recovery of it. So whether all these things satisfied in an employer-employee contract, I'm not very sure about it. So these are the things you should keep in mind when you are looking at working on this pure agent concept. You have to be looking at this particular thing. Next thing is the reimbursement of the toll charges. So this is again contradictory to whatever has been given above, where what happened is that I'm actually giving a rent-a-cab services, and during rent-a-cab services, I'm taking services for my whatever the charges. I'm also recovering a reimbursement for the toll charges which has been paid. The question came up is that because it's on an actual recovery, can I take the reimbursement of the toll charges, which is as a pure agent, and I will be able to take the benefit of the valuation of the supply? West Bengal AR says no, you will not be able to take that. So the concept, one of the things could be looked at is that there was no contractual obligation between my recipient and the toll charges to do it. Could be one of the reasons, but more or less, if all the condition has been contractually done, it will be told in the contract that toll is not never my responsibility, but you have to be there, your person has to pay the toll. However, if you want me to pay, there has to be a specific reimbursement agreement, and in that case, you will be able to come out of this West Bengal AR ruling in case of Premier Vigilance and Security Private Limited, and you will be able to pay the tax on that. So that is something could be looked at. Then there is another very landmark judgment as far as the input tax credit is concerned, which is on the Safari Retreats provision. The Safari Retreats, the Orissa High Court decision. So this is one of the very, very common questions which has been asked. Sudhir, I am doing a construction of a commercial property which I want to give it on a lease. What will happen to all the GST paid to various vendors or various contractors or works contractors? What happens to the GST on that? Am I eligible for the credit of it? A plain reading of section 17(5) says that you will not be eligible for the credit. But Orissa High Court in case of Safari retreats have gone beyond section 17.5, and they have told that we will be eligible to take a credit against the construction services which has been there, which could be used against the rental. So this is a landmark judgment which has been given, which has been now challenged and pending before the Supreme Court for the final verdict. So we are not very sure what is going to happen because it has been pending before the Supreme Court. Now, this is also something very common. Most of the chartered accountants would be having a client or this sort of a thing. Another first of the question, what we need to do in this specific issue, question comes up is that can I add this to, say, I'm a chartered accountant, I'm doing my construction of my office. Can I use the same Safari retreat decision here to tell that my office construction which I am doing is again further used for providing my chartered accountancy service? So taking the ratio of Safari retreat, although that was there for commercial mall renting, can I apply to my chartered accountancy service or my manufacturing unit or my trading unit, my godown, my factory or things like that, whether I'll be able to put out it? Answer is yes, it should be applicable if you're going by the same ratio. That is something you could look at. Second is, but because it is subjected to dispute, what is the best course of action which could be looked at? So it all depends upon the risk appetite of the client which has been there who wants to take. One of the options which has been available is that you could take the credit, taking the shelter under Safari retreat, intimate it to department that you are doing a Safari retreat, going by the Safari retreat. When you are intimating to department, there cannot be a allegation of fraud, collusion, suppression, misrepresentation, contravention of any provision with an intention to evade the payment of duty. All those things is not going to come because you are not giving your own manufactured interpretation. You are giving a judgment of an Orissa High Court which talks about this. So you inform this to the department, take the credit, also utilize it. What is going to happen if it is the Supreme Court rules in your favor? You are in a very good position, nothing to worry. If it goes against you, you have to pay this entire amount of GST and mind it, because you have utilized, you also have to pay it along with the interest of 18%. So for a business decision making, somebody will look at it is an 18% of risk what I am taking here, vis-a-vis keeping this money as is and borrowing at a 6-7% rate of interest and utilizing it. That could be a better option than going for a 18% utilization. So this is something a business decision one has to take for utilizing the credit or not. The advantage of intimating and doing it is that, as you are aware, the demand under GST is under two provisions. One is under section 73, another is under section 74. 74 applies only in case of fraud, collusion, misrepresentation. 73 is non-fraud, collusion, misrepresentation. It also comes with a provision where it says that in case of any dispute or anything is there, if you are paying the entire amount before issuing the show cause notice, then no penalty can be levied. So you have been totally safeguarded as a penalty here is concerned. If it is 74, then there is a 15% penalty, 25% penalty applicable, or you have to fight out your case as to why the penalty should not be applicable. So that is gets into dispute. So if you have made a simple letter, it cannot be under 74, it can be only 73. 73 should give a waiver, and also 73 comes with a lesser limitation period of 3 years rather than the higher limitation of 5 years, which is mentioned under section 74 is concerned. So this is something you could look at as an option. Second option is that one is take the credit, utilize it. Second option is take the credit but don't utilize it. What is the option of not utilizing it? One is that you are fighting the time bar of taking the credit. You have taken the credit. Because you have taken the credit, that particular credit you have not utilized, you can still argue that I need not pay the interest of it, although I have taken the credit. The third option would be to take the credit and reverse the credit, so that you are not coming within the time limit of taking the credit, that is 30th September of next financial year. You can always go back and ask for a restoration of a credit beyond the time limit also, because the retaking of the credit, the interpretation exists that it will not be applicable for this particular retaking of the credit. It is only for original taking of the credit. So this is something could be looked at as an option. The another option is don't take a risk at all, capitalize it and take the income tax benefit, so that at least over a period you will get the benefit of it. So these are the things based on the risk appetite you will be able to advise your clients on that. So that is on Safari retreat. We need to wait how the Supreme Court is going to react on it. Next is ITC to be reversed in relation to loss arising out of the manufacturing process. So this is provision which has been there as again as far as section 17.5 is concerned, where they talked about goods lost or given as a gift or samples are not subjected to GST. So there are certain manufacturing process where the goods have been naturally lost during the manufacturing process, and it has not been found in your output. It has been consumed or it has been evaporated based on various manufacturing process is concerned. So question comes up is that whether a section 17.5 restriction applies here or I am eligible to take the credit. So Madras High Court says that you are eligible to take the credit. So they were talking about a loss which has been there. So this loss could be a normal loss or an abnormal loss. If at all it is in the course of your manufacture, that is in the course of your business, all this loss which has been there would be eligible for taking a credit. So the next point of it which will come is that Sudhir, in case of trading also, there will be a pilferage, there will be a normal damages which happens, and many goods will go. There is also a normal loss as a process which has been there. Can we apply this particular decision of Madras High Court in case of ARS Steel even for a traders is something which has to be looked at and examined. Ratio applies, but you have to demonstrate your case there, because there is something which we have to look at. So another next decision again on Tamil Nadu AR in case of KLF Nirmal Industry is that the input tax credit on the solar power plant. So what happens here is that many of the integrated plants, they have their own captive solar power unit or whatever solar or any other power units which have been there. It could be through biomass or various other power units has been there locally. So there is a lot of inputs which has been purchased to generate the electricity. So this electricity is being sent to a manufacturing unit, and they use it for manufacturing of taxable goods. So when it is been used for manufacturing of taxable goods on which the GST has been paid, but electricity per se is exempted from GST, the question arises is whether I'm eligible to take the credit on the inputs used for manufacturing of electricity. So this AR beautifully has told that if it is a captive power plant and this electricity is used in the end product is taxable, then the ITC incurred for the installation of solar power plant should be eligible for credit. Not only installation in solar power plant, any inputs which is going into the solar power plant will be eligible for the credit. But here you have to mind one certain thing is that when this particular input is there, it may so happen that you are not able to consume the entire power, and power is something which you cannot store. So you end up giving it to a grid and you get paid for it, which is not subjected to GST. That is a sale of electricity to somebody else through a grid who is not liable for GST. So whatever the inputs is there, in which case you will be getting a proportionate input. So again, that input should be exclusively for the power plant and not the entire inputs for that particular plant has to be looked at. It's only for the power plant only has to be looked at, and the credit has to be restricted to that particular extent. Next, there is a ITC issue which has been there, whether an ambulance is eligible for getting the credit, where they have told that ITC on purchase of ambulance is not eligible as a credit because the motor vehicle for use for goods is eligible and only passenger vehicle beyond 13 seaters or something is eligible. So they have told that the ambulance is not coming under here. Further, only rent-a-cab, life insurance are covered under the obligation of the employer to employee. So there is also something a rent-a-cab and a health insurance. If it has been statutorily obligated, then it is eligible for a credit. It's been given as an exclusion for 17.5, which is a block credit. So that also will not apply here because if it is not been statutorily mandated as far as the ambulance purchase is concerned. So that is the ARR which talks about the eligibility. Next is ITC would not be available on building materials and services to the extent which has been capitalized. ITC would be available on supply of wood, mica, labor supply, repairs of existing furnace and fixtures. So if you look at section 17.5, this is again not looking at the Orissa High Court judgment. Orissa High Court judgment says even if you are capitalizing not the GST amount, capitalizing the expense for construction as a building, you will be still eligible for a credit. So the section 17.5 says that if to the extent repairs and renovations and whatever you are doing, to the extent you are not capitalizing to the asset, you will be eligible to take a credit as a building if you are not capitalizing. you can still capitalize it as a furniture, fixtures, fit outs and everything, you will be still eligible for the credit. So this particular provision which has been there, now they have looked at whether this building material to the extent of capitalized, they told they are not eligible. But supply of wood, labor for repair, which you are not capitalizing it, you are treating it as an expense, that will be eligible for your credit. So that is the position of the law, which has been rightly clarified as far as the Rajasthan AR is concerned. But still, you could look at explore the option of the Gujarat High Court in case of Orissa High Court in case of safari trades. ITC would not be applicable on purchase of motor vehicles when the outward supply is renting of the motor vehicles. I think there is an error here. It says when the outward supply is not renting of immovable property, then it will not be eligible. So, pardon me, there is an error in this particular thing. Next, there are certain decisions which has come as far as the e-way bill is concerned. So, one of the e-way bill, again, most of you would have had one or two instances where the goods of your client or sold by your client or bought by your client has been stopped in the road, and they have been levied the tax, advance tax, and they have also asked to pay the penalties of it, 100% penalties of it. So there are various things which has been there as far as the detention and those things. There are a number of case laws which has been there. So one of the things is that the provision allows you to execute a bond in lieu of the amount payment, and it can be the goods and the conveyance could be released. So this is something which is possible. There is again a Telangana High Court decision in case of Satyam Shivam paper, where they told that there was an expiry of an e-way bill which has happened. They told merely because there is an expiry of an e-way bill, you cannot presume that merely because there is an expiry, you cannot presume that there is an evasion of a tax, and all the penalty can be levied only when there is an evasion of tax. So in which case, when there is a valid invoice, then there was a tax which has been paid and sent, or to be paid and sent when an invoice is there. Only because the e-way bill has some errors or it has been expired, a tax cannot be collected upfront and the penalty cannot be levied. So this is a decision of Telangana High Court, which will be very handy. But it is all very difficult to show this sort of a case laws at the checkpost, or not the checkpost. Now the checkpost is not available. Every road is a checkpost now. When it has been stopped under transit, it becomes very difficult. But these are the decisions which is available. So there is another decision which has been given in Gujarat High Court. There they say that for the purpose of inquiry or investigation, the two trucks may be kept into the custody of the department, and trucks shall be released only after taking an undertaking and writing in. So there was two trucks, they kept it in custody. The moment an undertaking or an oath was given, that should have been released is what they have told. Then unloading of the goods of the destination does not depend on the destination arrives first. So this is again a Telangana High Court which had happened is that they had a transit which the goods were supposed to be unloaded in two places. So the goods which was there in the first was in a place away from Hyderabad. From where it has started, it was first coming to Hyderabad. So somebody was going to a place other than away from Hyderabad, Mehboob Nagar or something. He was going there and he wanted to download there the first consignment and come back to Hyderabad and download the second consignment. So somebody stopped the truck here and saying that no, you should have first downloaded in Hyderabad, then you should have gone to Mehboob Nagar. Because you are going to Mehboob Nagar directly, then you have to pay that. So they have told that it is not that it has to be in that sequence when it has been there. It all depends upon the transporter will decide as to the nature, quality, and the quantity and the weight of the goods is concerned. Based on that, they will decide as to which should be unloaded first and which should be unloaded later. So that is what was covered as far as the e-way bill is concerned. Then there are certain decisions as far as the TRAN credit is concerned. The taxpayers were allowed to file the TRAN 1 credit beyond the due date also as far as the brand equity treaties was concerned. Then there is a decision of Southern Land Global Services Private Limited, where they told the accumulated education set, SSC cess and Krishi Kalyan cess can be carried forward under the GST transactional credit. And there is also a decision in case of Schlumberg Asia Services Limited, where they told that up to 30th of June, whatever the credit of the cess which was there in your books of account will be eligible for taking the credit. So that is what was given as far as the transaction credit is concerned. So this completes my talk, and I have completed early the talk by 20 minutes so that we have sufficient time to take all the questions. I would be answering the questions to the best of my capability. And if Anil is still there on the call, he would also help me to take the questions. These are not the only landmark judgments which has been there. There are n number of landmark judgments which has been available, but I have taken only few which could be relevant for most of the practitioners. That is what I have been looked at, and I have picked up selected landmark judgment for having a deliberation upon. So thank you all for patient listening. I thank the Hyderabad branch for giving me an opportunity to be here and share my thoughts. Thank you all. Open for questions.
Thank you, Sudhir sir. Do you want me to read out the question for the benefit of all the members?
Yes, sir, that would be better.
Okay. The first question is from Mr. Arvind. Sorry,
Nothing from me.
KMC Anandan. Should the SSC record be robust enough to demarcate the ITC for each business vertical if more than one? If there are common material used for more than one vertical, how should we need to bifurcate? Whether ITC of one business vertical can be used for setting off with the output liability of other vertical.
Wonderful. So very good question which has been asked. A lot of people have this particular doubt. Say I have one business vertical. Say I'll take having a hotel, and I having another business vertical. I'm into manufacturing of certain goods. So two business verticals are there. Now, first of all, we have to look at how we have to take a registration. You have two options for taking a registration. One option is I can take a single registration. If there are both are located in the common state, I can take one registration. And when I'm taking one registration, there is only one electronic credit ledger. Whether it is coming from restaurant business, the hotel business, or it is coming from manufacturing business, it will come into one single pool. Once it is there in one single pool, you cannot identify which belongs to what. It is commonly usable for either of the services. So this is something which you could look at. But if you have taken an option to take an independent registration for each business vertical, their credits are respective to their credits. It cannot be interchange used. So the decision for doing this comes from your registration first. There is no restriction for using a credit of one vertical with another vertical. You can always use. There is no requirement for you to maintain separate records for a vertical basis, except if you are doing a real estate project and you are under a 5% scheme. Then the purchases of each GST, what is that, RERA registration, each project within the same registration, same city also, you have to keep it into a different vertical, because they want to check 80% of eligibility there, the taxable purchases from that particular project, not as a company as a whole. So thereby, except for that, there is no anywhere where the vertical wise registration should be maintained. So I hope that question answers Anandan.
Yes, sir. I think it is in continuation, sir. There are two factories units in a company, one in DTA, the other in SEZ. The SEZ unit secured the export orders, but the manufacture of the goods take place at DTA. The DTA unit transfers the manufactured goods to SEZ as the sale. The SEZ unit then adds up a margin and export to the overseas buyer. Can the DTA unit bill the SEZ unit, both are strategic business unit, even in the same company as above, for supply of finished goods? What would be the billable value if there are no prices comparable goods available in the market? That is first question. If the DTA unit does not charge GST to the SEZ unit, as it is a zero rated supply, can the DTA unit claim a refund of ITC on its purchases? Will the answer be different if the DTA directly ships the goods to the overseas buyer on behalf of SEZ? Okay.
Let me come to one after the other. The first question here, the facts are that there is a DTA and SEZ. So SEZ is having the export order, obviously, because it's an SEZ. That's the reason they would have registered. The manufacturing is done by a DTA unit. So what they want to do is they want to transfer it from DTA to SEZ. So here one basic fundamental deviation which I am looking at is SEZ cannot be a trader of goods. Only a certain percentage, 10% or something, they are allowed to do that. Otherwise, they have to be strictly a manufacturer of goods. There are other schemes which has been available like movers and things like that, which could be exploring. But as far as the SEZ is concerned, you have to be a manufacturer of goods. So the query which has been asked that I will sell it to SEZ, SEZ will only add a markup and export it as is, will not work. They have to do a certain value addition. It could be a packing, it could be a finishing. Some manufacturing activity should happen subject to the SEZ, the satisfaction of the SEZ officer. So that is something which you have to look at. However, if you are going ahead and doing this, you are transferring, then adding up a margin, DTA, can it bill to SEZ unit, being both in the same company? SEZ mandatorily you have to take a separate registration. You cannot take a single. Earlier I told, if you have two different vertical, you have an option to take two different registration or one registration for both the unit. But when it comes to the SEZ unit, they have made it very, very clear that SEZ mandatorily has to take a separate registration. So any transfer between two registration, even of a same company, should be suffering GST. But in this case, you can execute an LUT because it is under the SEZ. You can supply the goods without payment of GST by executing an LUT. After you have supplied, whatever the input tax credit is there, you can go for a refund of it, no issues. Or you can go with the payment of duty there and SEZ can go for a refund. Both the options are available because it's your same entity, better to go for a refund from a DTA unit. So I think all the questions have been answered here. If DTA unit does not charge GST on the SEZ, as I have told, refund, yes, purchase of refund is available. Will the answer be different if the DTA directly ship the goods to overseas buyer on behalf of SEZ? So now see, for the purpose of on behalf of SEZ, nothing will be there. It's only one company. So Sudhir Associates, that's all. Now Sudhir Associates has one SEZ unit and I have a DTA unit. So when a goods is exported by Sudhir Associates, that's all. So thereby you can directly export from a DTA, and that exports also is a zero rated supply. You can have two options with payment of GST for refund or IGST with refund, or you can execute LUT and export it without payment of duty and take the purchases, whatever is there, as a credit. So this is something could be looked at.
Perfect. So the next question, Mr. Rajgopal sir, in order to avoid GST by RWA, that is Residential Welfare Association, initial corpus can be collected and the interest on the same can be adjusted against the monthly maintenance charges, thereby reducing the monthly maintenance lower than 7,500. Will it be a correct understanding of on the tax plan?
So it all depends upon why the corpus which has been collected. So there are certain places like Maharashtra, if I am not wrong, they collect something called as a sinking fund. So what they say that you give a fund, this fund will be used for specific purpose, that is for repairs and maintenance of building, painting of building. So every 2 years or 3 years when they use it, they keep on reducing this fund to the extent of usage. So there was an interpretation which was coming is this is nothing but your maintenance only, you are giving in another way. Now coming to a corpus fund, what is that your bylaws is allowing it? Why the corpus fund is been given and how you have to use the interest on the corpus fund has to be clearly coming out. If it is telling that the interest is coming again for the purpose of maintenance, the regular maintenance, then you may be having a challenge. If it is for contingencies, it's different. But if it is regular maintenance, it could be different. It has to be tested whether you can do it or otherwise can be looked at. Straight away, I'm not saying no, but this is something which is a gray area which has to be tested. Per se, if you look at if I'm having a corpus fund, I'm deriving an interest on that. Interest is not subject to GST. Very good. Once an interest is there, I will use it for my operations. Nobody can stop me. So straight away, you have a point there, but somebody is going substance over form. You may be having a challenge to prove it.
The next question is from Jayaraman sir on the same RWA sir. RWA have expenses like salaries, electricity, water, on which there is no GST payable. Can this be set off against the exempted collection and then calculate the eligible input credit? Example, 1,000 is collected, which is exempt, 2,000 collected, which is taxable. Salary paid is supposed to the staff 750. Then can the 750 be set off against this 1,000 and then calculate the input tax credit?
No, all those things you cannot do. See, you have to understand what is the concept of maintenance. So maintenance is taking the service, taking the contribution for a common services which the entire apartment is taking, which may include taxable, which may include exempted. There is one school of thought that supply of electricity by an association is a separate contract by itself for an identified consideration which should not be subjected to GST. That is your house electricity. Whether that will again apply to a common electricity which has been apportioned, answer may not be, maybe no. Then water consumption happens to your house particularly, not the common. So these are the things you can actually keep it as a separate levy which has been collected on an actual usage that need not be coming under 7,000. But which is coming as a common water usage, common electricity is very difficult for you to identify that. Then again, you cannot get into exempted taxable and bifurcate it and try to take a credit of it. That will be a too far-fetched mathematical calculation. I am not very sure whether this would be getting through. In my view, we cannot do that.
The next question is from Saran sir. It is little, I think, on the yesterday topic. The first day topic is on the tax treatment of the plotted developments. Would like to take, sir?
I could take, but I don't know whether I'll be contradicting
Correct.
Vaitishwaran or I'll be supplementing him. No, not Vaitishwaran, Prasanna Kumar, I think. I am not very sure, but I can take my question. As per me, the plotted sale of a plotted plot, whatever developed plot, is a sale of land not subjected to GST. Whether it is to be plotted or already plotted, it doesn't make difference. But a development charges which has been there, if you are exclusively collecting a development charges, that would be subjected to GST. So that is the right way of doing. There is a Gujarat AAR which says that no, this is also coming under residential development and all. So I personally beg to differ that. I would still want to argue sale of land is not subjected to GST. Yeah, that's my view.
Done. Thank you. The next question is from Jayaraman sir again. RWA collects amount paying GST and uses it for demolition of old offices and reconstruct a new office. Can ITC be claimed? While charging off to PNL, at least the demolition expenses makes a difference.
RWA collects amount paying GST. Okay, that is from the member.
Yes.
Uses it for demolition of the old office and reconstruct the new office. Can ITC be claimed will charging of P&L? If you take the decision of Orissa High Court Safari Retreat, construction of a maintenance office for providing the taxable service of maintenance services will be eligible for taking the credit.
Rajgopal sir, what is the provision related to refund of ITC in case of my output tax is lower or nil?
If your output tax is nil, you will not be eligible for any refund. But if it is lesser rate than your input, then you will be eligible for refund subject to the formula which has been given, which we call it as the inverted duty structure refund, IDS we call. So under that provision, you will be eligible for taking the refund.
Yes, sir. Thank you. Next is from Hanmantlu sir. The composite dealer sold ice cream to another trader. He has issued invoices with GST collected from the purchaser. But while filing GSTR1, he has shown the turnover as B2C instead of B2B. How the composite dealer can get, or how purchaser can get ITC?
One is whenever there is a composition dealer which is there, the tax paid by the composition dealer is not eligible for ITC. Now this composition dealer, whether it's shown under B2B or B2C, is irrelevant. The recipient will not be eligible for the credit.
Correct, sir. Pankaj Kumar says, sir, can I merge two GST verticals of same PAN by transferring the BIS on a going concern basis? And what is the implication of provision to Rule 28?
Yeah, so this is possible. Recently also I was advising there are two manufacturing units in the same state and they wanted to merge it together. They had independent registration. So the simple procedure is that you have to intimate that we would want to go for a single registration and not want to continue with the dual registration. So you have to transfer the credit of one unit to the surrendering unit to a principal unit by ITC 02 form. You transfer the credit. Once the credit is received here, you go for a surrendering of this particular unit intimated department. So that is a simple procedure you could do within the same PAN. You could look at. The provision would be of merger amalgamation only. Here it's not merger amalgamation. It is a deemed two distinct entity getting together. You need not have a separate document. You can treat it as a merger amalgamation, and you can follow this particular provision. Proviso to Rule 28. Rule 28 proviso, he talks about transfer of goods to another unit of mine when they are eligible for taking the credit. Whatever I am showing on an invoice is a deemed open market value. So thereby you will you could use the proviso to second provision to Rule 28 and make the transfer of the stock or whatever it is at a whatever the declared value if the recipient entity is eligible for the credit. So that can be done.
Next question is from Apurva Jaisima. Mandatory requirement for SEZ to obtain a separate registration has been removed from 1st February 2019. So DTA unit and SEZ unit can function in the same state, either under the same GSTN. Kindly correct, sir, if I missed something.
I'm not very sure. I have to check about it. Anil, you have an idea on this? Anil, are you there?
I think.
Mr. Apurva, you can leave your email ID. I can check and can confirm. To my memory, it's not so, but I may be missing something. I can check and confirm.
Whether electricity amount can be excluded for charging GST for RWA.
As I told, unit electricity, yes, you can exclude, but it is common electricity. I have my doubts. You cannot exclude.
Then the unicorn industry case on NCCD cess, can it be applied on SWS in GST era?
What is SWS? I'm not very sure about it. I have to look into it again. If Sri Ranjani can send me an email or drop your email or send me an email, I'll be able to look into it.
Then, sir, I have converted individual propriety concern to partnership firm. How I need to merge or transfer the goods in propriety concern to firm without paying GST? From Mr. Arvind.
So proprietary concern has been transferred to a partnership firm, ITC02, same. The merger, amalgamation, all those things is ITC02. As I told, file ITT, take a registration for partnership firm, new registration because it's new PAN, take a new registration. From old proprietary file GST ITC02, it will come as a credit in your partnership firm. After that, you will surrender this, intimate it to department.
Done, sir. The next question is from Rajgopal sir again. There are no major deviations in terms of interpretation relating to availment of ITC under all acts prior to GST and GST. Is it correct?
There is no major deviation in terms of interpretation relating to availment of ITC on all aspects prior to GST. Okay, so he's saying, can I apply all those decisions applicable to SENVAT under GST provisions? Mostly yes, beyond also yes, because earlier SENVAT credit had certain restrictions. Now it is relating to business, it's much more, but some into 17.5 and all, you will not be able to. I can say 80% you can apply, 20% may not be applicable.
Next question, sir. Last two questions from Avinash. If capital assets are sold with GST charge, why should ITC on capital goods be reversed? What is the logic?
If capital assets are sold with GST charge, why should there is no reversal of ITC unless until you are using it for exempted supplies. If you are using it for exempted supplies, then only you have to reverse. But when you are paying, you will pay on the residuary value. But you are using it for exempted supply for a higher monetization. If it is for taxable goods, nothing to worry.
Mr. Prashant, shall we continue taking questions? Or I think we are already at 8. Shall we continue taking questions? Or we are already at 8.
We can take these 3 questions, no problem.
Okay. Will a zero-rated output product eligible for ITC refund under inverted duty structure?
Zero-rated output product eligible for ITC refund? Yes, you will be eligible.
Next from, I have both intra and interstate purchases and purely within the state sales. CGST output is getting off against IGST and CGST. How can I get refund of excess CGST input balance?
I have both intra and interstate purchases purely within the state sales. So my input will be CGST, SGST, IGST,
Yes.
but my output always will be CGST, SGST.
Yes, sir.
So in this case, what happens is CGST output is getting offset against my
IGST.
IGST credit and CGST. How will I get a refund of excess
Yes, I think it should
CGST
be.
input balance?
I think it should be SGST input balance.
It will be an SGST input balance. One thing you have to look at that the portal allows for an auto set off, but you could always go ahead and make that correction and use the CGST, SGST, and then you can use the IGST. So that is possible. So maybe something of that has to be looked at here. But you will not get a refund. It is only a manner of utilization. You have to smartly plan and take the utilization.
Last question, sir. The proprietor died and the son carries the business. And can he avail the ITC lying with the previous owner?
So this is again through a succession. This is only an individual, is it? So again, if it is a succession, we can always use that provision of transfer of ITC 02. But he will be a representative associate. So somebody is filing, will be filing on behalf of the deceased, and you have to get the transfer of credit. Same provision can be used.
I think one more question came, sir. Sir, what is your view on two contradicting High Court orders on input and input services for inverted rate structure refund of ITC credit?
So I feel the input tax credit should be available. There is a contradictory decisions, and we have to look at how Supreme Court will look at. I feel that ITC credit should be eligible in those decisions is concerned.
Thank you, sir. Thank you so much for your patiently handling all the answers and giving it to the best of your expertise. We are really thankful. Hyderabad branch is always thankful for all your efforts, sir.
My pleasure, sir.
Sir, before, with your permission, I'll share the screen.
Sure, sir. Sure.
As is a tradition, you know, Hyderabad branch, you may be having already numerous certificates, sir. Kindly accept a token of gratitude.
Every time it will add to my library, sir. So I'm not vexed of the certificates. I'm happy that you are giving this certificate. Thank you.
Thank you so much, sir. Kindly accept it, sir.
Sure, sir. My pleasure.
Thank you, Sudhir, sir, for your excellent coverage and emphasis on the landmark judgment, which has given a crystal clarity on various law points, which has been the matter of dispute, however, been settled by various courts. We are very thankful for your excellent presentation and excellent clarity thoughts, sir. Hyderabad branch, you are the first go-to man for the Hyderabad branch for any indirect tax program, larger programs. We definitely look forward to you for your continuous support, and we hope you have been always supportive and you will continue to do your best in the interest of the members of the Hyderabad branch, sir. Thank you so much.
Thank you, sir. My pleasure.
I thank all the attendees for joining the session program for today. And I also thank our speaker for the 5th day, C. Anil sir, for joining today also and being with us for today. I request all the attendees to kindly join for tomorrow at the same time for the day 4 of the program. It will be our promise that this will be the continuous knowledge session series at the same expert level and advanced level for all our attendees. And we request you to kindly attend on time and take the full useful benefit of the session. Thank you. Take care. Till that time, take care of your health. Stay indoors. Stay safe. Thank you.